So if you're watching this video, I'm going to say one of two things is happening. One, you're intrigued. You're thinking the thumbnail, or is there really no income verification loans out there? Or two, you're running into a problem, financing or buying another investment property. So those are the questions and answers we're going to have for you today. Because on this channel, The Rate Update with Dan Frio, I'm Dan Frio. Our goal here is to educate and inform you guys everything real estate, especially when it comes to your financing options. So what's happening recently is there's people trying to buy investment properties, but they're having a tough time. Okay, one of the things is because of the rent moratorium, some investors, you yourself might be out there, you don't qualify because you didn't collect as much rents last year as you should have. Or you might have had some lower income because you were laid off or had temporary jobs and so forth. It doesn't really matter why. So then it comes to play where when we throw in those finances, you just don't qualify anymore. Okay, because we analyze the tax returns and the cash flow of the buildings, all your other debt, your 2 years tax returns. What if I said, let's throw all that stuff away? Let's throw it all away. Let's make it this simple. As long as the credit score is there and you have the down payment and the property cash flows, and I'll explain that to you here in 1 minute, you should be able to qualify for this program. It's unlimited on how many properties you can own, and truly the property stands alone. Okay, we don't need tax returns. We don't need a whole bunch of other stuff. Your other debts come into play only for the credit in your credit score. So intrigued? Let's look into the program. So let's break down this program. What exactly is it? Well, the program is called the DSCR. It's called the Debt Service Coverage Ratio, right here, right? So what it is, the program focuses on the property's cash flow, so no other income documents are required. Sorry about that. And basically, here's how it works. The debt service coverage ratio is this. You take your gross rents from either, well, we usually use the appraisal, and we'll do part of the appraisal, we'll have a rental analysis on there, is you take that and you divide it by the principal, interest, taxes, insurance, and if there's an association fee. So basically the entire mortgage payment, right? If that number comes out to be greater than 1, it means there is sufficient cash flow to cover the debt servicing. It means you're good to go. If it's under 1, that means you don't have enough cash flow to do this program. There are times where we can use 0.8 in this cash flow analysis and still get you done. But the biggest thing here is that your credit score is in line, and again, you have the down payment money. So the minimum DSCR, this ratio that's allowed, is 0.8 for purchases and 1 for refinances. You can close multiple investment properties at the single time. You can actually go up to 85% loan to value, so 15% down if you're looking to purchase a property. Okay, if you're looking to do rate cash out or rate and term to get a better rate, you go to 75%. You can also buy properties up to 8 units. So normally, once the building goes over 4 units, it's called a commercial property. You can't get normal financing on it. This program, you can go all the way up to an 8-unit property. Loan amounts up to $1.5 million, and you can pull out cash up to $500,000. Here's some good news on this, and where a lot of people get turned down with normal programs, and where you won't get turned down in this one. No limit on the number of properties financed. Usually it's 10 properties. This one has no limit. You can't do non-warrantable condos, and condo hotels are allowed up to 70%, and you can qualify in the interest-only payments if you have excellent credit and you have your cash flows and everything else. So there's ways to qualify with this in regards to, if that debt servicing piece is just a little bit lower than it needs to be. Okay, so one of the caveats one of the complaints people are going to say, Dan, here you go. Here's that 40-year term. Here's the adjustable rates and everything else. Guys, this is for an investment property. Okay, normally when somebody has an investment property, they have multiples, and their credit is going to play a huge role in this. How's the mortgage history on all the other properties? That's a big point here. What's your credit score? Do you have the assets to do this? If you do, they're saying, well, you're an investor. You know what you're doing. So you can buy a property 15% down using this program. And again, the only thing that comes into play, I don't need 1, 2, 3 years of tax returns. I don't need mortgage statements on every property that you have. I don't need an Excel spreadsheet breaking down your profit and losses on every property. It's really simple. We get an appraisal on the property with a rent schedule. As long as that rent equals to or exceeds what your complete mortgage payment is, you should be on your way. So to find out more about this, please reach out to us. We would love to help. The best way to do that is call us at 844-775-5626 or visit us at therateupdate.com. God bless. Thanks so much for watching. If you find value in this video, please don't forget to give us a thumbs up, subscribe down below, hit the bell every time we post a video. You get an alert. I'll see you tomorrow.